Hi, this is Pablo Herrera. In this video, we're going to look at setting up tax calculations for a particular business use case with Salesforce billing. So the business use case is for a company called Ultrasound that requires the ability to calculate tax on orders and invoices for their billing. Ultrasound requires to be able to apply taxes in California, where its customer Soundtech is located. The state general sales tax rate of California is 8%. This will include all products except for speakers, which is tax exempt. So the first thing we need to do is to configure the package level standard tax engine settings. So we're going to provide a value for the tax calculation is based on field. We will base it based on the billing address of Soundtech. So as you can see, the billing address is from California state, which we will configure later on. Okay, so we'll start by creating a new tax integration. So this tax integration, I call it standard tax integration. Make sure it is active and it is the default tax integration for the tax calculations. For this tax integration, we're going to choose the standard tax engine. There's also an option called Avalara App Tax, where this is a third-party gateway. So for the sake of this demo, we're going to use the standard tax integration. After that, we're going to create a tax rate record. So my tax rate record, I call it California sales tax rate. So this is pretty important. When you select the state, this has to be matched with the billing account state for the Soundtech account. So here we're going to use the California state. We mark the priority as 0. So the order of priority will be first 0, then 1, then 2, then 3. The tax code will be 123 ABZ. This tax code, we're going to use it later on for our tax treatment. So this will be a matching field that we will use for later purposes. And of course, the rate, which will be 8%. After the tax rate creation, we'll go ahead and generate tax rules. So the tax rules, we're going to have 2 tax rules, one taxable and another non-taxable. This non-taxable will be for speaker products. So here I have my taxable tax rule. So let's make sure it is active. And since it's a taxable tax rule, we'll say it's taxable. So for each tax rule, we're going to have to create a tax treatment to apply this tax. So the tax treatment, we're going to call it California State Tax Treatment. The tax code will be matching the tax rate, which it is 123 ABZ. Then we'll populate the standard tax integration we created and the tax rule, of course, that the treatment is related to. So the other tax rule will be the non-taxable one. So we'll select taxable as no. And there won't be no treatment since we're not going to apply this tax rule. So after this, we're going to create a quote. We're going to order this quote. The order will have headphones, microphones, and speaker. So as we can see, the headphones has a $50 unit price. So if we say the taxes are 8%, the taxes will be calculated as $4 tax, as you can see in this order product. Let's check the microphone product. So 8% of $30 would be $2.5 as an estimated tax. And this company didn't want they wanted speaker to be tax exempt. So as we can see on the order product of speaker, there's no taxes calculated for this one. So when we go to the order itself, we can see that the estimated tax is $6.4 as we needed it to be calculated. So as of the invoice is going to behave the same. So here we have the subtotal without taxes. The taxes, as we already mentioned, is $6.4, and the total amount will be $186.4. So this is the whole process of creating a simple tax calculation. If you have any questions, please comment, and thank you very much.